In Canada, corporate directors face significant personal financial risks when a business becomes insolvent or enters a wind-down phase. This guide highlights how individuals can be held personally liable for specific company debts, including unpaid employee wages and government tax remittances like HST and payroll deductions. To mitigate these risks, directors must actively establish a due diligence defense by maintaining meticulous records and proactively overseeing financial obligations. Brandon Smith, Senior Vice President of Ira Smith Trustee and Receiver, Inc., provides a comprehensive guide to directors and officers on D&O insurance, specifically for businesses in Toronto and across Ontario. I am Avatar Ira Smith, President of Ira Smith Trustee and Receiver, Inc. Right now, Ira and Brandon Smith are helping entrepreneurs and consumers just like you. We are a true family business. We are not for everyone, but if we accept you as a client, rest assured you will get the best possible professional advice, and you will always deal with a trustee, not a clerk or assistant. So if you or your company are experiencing financial difficulties, call either Ira or Brandon Smith today. I hope you can watch until the end of this video and that you find the information helpful.
So you're a director. You've got a lot of responsibility on your shoulders. But here's the real question. Do you really know what's at risk? I'm talking about your personal assets. In this explainer, we're going to skip the jargon and give you a simple weekly watch list to keep you safe. Let's get right into it. And this quote, man, it just hits the nail on the head. It's so easy to get comfortable, to think you're protected. But when a company starts to struggle financially, that feeling of safety can disappear in a flash. And suddenly, everything you've worked for is at risk. Okay, so first things first. We need to talk about a really common and really dangerous myth. This idea that as a director, you're wrapped in some kind of impenetrable shield that protects you from everything. You know, we all learn that a company is its own legal person, right? And that's true, mostly. But here's the catch a lot of people miss. There are specific laws in Canada designed to literally pierce that corporate veil, especially when a company is in trouble and can't pay its bills. And when that happens, we're talking about your home, your savings, being on the hook for the company's debts. And this is where things get really interesting. Think of it like this. When the company's doing great, your main job is to keep the shareholders happy. You're focused on growth, on making money. But the second that company becomes insolvent, and that just means it can't pay its bills as they come due, the game completely changes. The law says your focus has to shift. Suddenly, your number one priority is protecting the company's assets for the people it owes money to, the creditors. If you miss that shift, you're walking straight into personal liability. Okay, so the risk is very, very real. I think we've established that. So what do you do about it? Well, you don't panic. You get proactive. We're going to give you a practical checklist, a watch list of things you need to be checking on the regular. And we're not talking about 100 different things. We're going to zero in on the top 3. These are the 3 big ones that every single director in Canada needs to be looking at, not every quarter, not every month, but every single week. All right, watch list item number 1. This is the big one. It's the government's money. I'm talking about things like HST or GST that haven't been sent in and all those payroll deductions, income tax, CPP, EI. Trust me, this is the one the CRA gets really aggressive about with directors personally. So why is this one so serious? It's because of a legal term called trust amounts. Here's what it means. When your company collects HST from a sale or takes taxes off an employee's paycheck, that money was never the company's to begin with. The company is just holding it in trust for the government. Dipping into that cash to pay other bills is a massive no-no, and it's a fast track to getting a bill from the CRA with your name on it. And get this. This is how long the CRA's arm is. You think you can just resign from the board and walk away from the problem? Nope, not so fast. The CRA can look back 2 full years from the day you resign and still hold you personally liable for that money. Resigning is not a get-out-of-jail-free card. Okay, number 2 on your weekly watch list, your people's money. We're talking unpaid wages up to 6 months worth and unpaid vacation pay up to a full year. And here's the really scary part. The liability is joint and several. What does that mean? It means an angry employee can choose to sue just one of you, maybe the one with the deepest pockets, for the entire amount owed to them. Then it's up to you to chase down the other directors for their share. Good luck with that. And number 3 is a catch-all for other hidden dangers that can totally blindside you. Remember that personal guarantee you signed for the company's bank loan or office lease? Well, that's a direct promise from you, personally. And here's another one people forget: environmental cleanup. In some places, directors can be on the hook for millions in cleanup costs. It's a huge, often overlooked risk. All right, that was a lot of scary stuff. I know it can sound a bit overwhelming, but here's the good news. You are not helpless. There is a powerful defense you can use. So let's talk about how to build your due diligence shield. This is, without a doubt, your most important tool for protection. So the courts have this concept called a due diligence defense. Basically, to use it, you have to prove you did everything a reasonable person would do to prevent the problem from happening. See the difference? It's not about what you did after the fact. It's about proving you were trying to stop it before it happened. And how do you prove it? With your paper trail. And this is what it looks like in practice. Are you just nodding along when management says, "Yep, all the taxes are paid"? Or are you asking, "Can I see the remittance slips from the CRA"? Are you making sure your questions, and especially if you disagree with something, are actually written down in the board meeting minutes? That isn't just boring paperwork. That's your evidence. That's your shield. It proves you were awake at the wheel. Now, even if you do everything right, you can still get sued. It happens. That's why you need a financial safety net. And that brings us to D&O insurance, directors and officers insurance. But, and this is a huge but, you have to pay attention to the fine print. Most D&O policies are claims made. That means they only work if a lawsuit is filed while the policy is still active. So what happens if the company goes under and cancels the insurance? You're completely exposed. That creates a massive gap. That's why you need something called tail or runoff coverage. It's an extension that protects you for years after the company is gone, for things that happened while you were there. It is absolutely essential. So you've got your due diligence shield. You've got your D&O safety net. You're prepared. But sometimes a storm hits that's just too big to handle on your own. You need an expert guide. And that leads us to our last point, knowing when to pick up the phone and who to call. When a company is really struggling, your best friend is a licensed insolvency trustee, or an LIT. These are the only people in Canada legally allowed to handle formal insolvency situations. An expert LIT, someone like the folks at Ira Smith, Trustee and Receiver, can come in, give you the stone-cold truth about the financial picture, tell you exactly what your personal risk looks like, and even help you document all those due diligence steps we talked about. They really are both your shield and your guide. And this quote here from Brandon Smith over at Ira Smith, Trustee and Receiver, it just says everything, doesn't it? He sees it all the time. Directors just crossing their fingers, hoping things will magically turn around. But hope is not a business strategy, especially not when your own house is on the line. The only thing that works is taking proactive, informed action. Look, if you're a director and any of this is ringing a bell, if you're even a little bit worried about your company's finances or your own personal risk, the time to talk to an expert is right now. Not next week, not next month. A confidential chat can give you a clear path forward and a real strategy. And remember, the sooner you make that call, the more options you're going to have. So let's just leave it with this one final question. You took on the role. You accepted the responsibility. Your reputation, your home, your savings, they're all on the line. So what's your strategy?